Good morning, everyone. Today is Thursday, August 16th, and this is the morning report. We're going to look at a couple of different things going on in the market today. We can see the wide range of motion looking at the charts, but I want to look at the monkey bars. We know the monkey bars give us, oops, we don't want that time frame. Let's take a look at a 30-minute monkey bar. We know that these monkey bars are the volume profile events that we're watching in general. You can see where price is right here. We are congested. And every time we lose our levels, we slip back into this congestion zone. And so the element of neutrality still exists for us. So how do we put ourselves into a space of engagement if we are seeing this? I'm going to drop this down to 2817 because I like that number a bit better than my 2820 at this juncture. Now we know that we should hold this region if we're going to sit above it in general fashion. But any kind of fade down here we can short. We just know as we come into these edges that we're likely to have ourselves a bounce zone, right? If I take a look at maybe, I don't know if these guys, let's see how they give me a, oops, not that it's like that. Take a look at yesterday's volume event and how we packed that in the morning, right? Yesterday we fell right through this zone that should have been support. We built a new price acceptance event here and ran up through it, headed back into the low profile event and started building that volume out again. Could be a support zone, folks. I have no idea what we are going to do here, except that I can say, listen, from an intraday perspective, how I'm looking at the charts, I should have a bounce on my pullbacks. Now, where should the pullbacks be? You know, they could be right here. Right here's our zone of entry in the space, right? There's, I believe that's my opening range right here in my chart, this darker space. I need to fix that, don't I? It seems to be quite let's go here. Appearance, initial balance. Okay, so let's change the initial balance to some kind of color that is bright, but oh look, she picked orange. Oh my gosh, who would know? Yeah, of course I pick orange. That's a great color. All right, so here, let me set this as the right space for these guys. Oops, I did not do that, did I? Yes, I did. Hang on. Oh yeah, it saves it automatically now. Thinkorswim just shifted that. Okay, so let's get back to our motion. Let's go back here. And let's take a look at our daily charts. We've got a reversal pattern showing here. So legitimately, we could have shorting action all the way up to here, right? Really, we would not really want that to happen because that is going to make things fairly difficult. We'll end up with our 1, 2, 3, 4 patterns here up at the top and then a resolution down or a resolution up. But really, here's what we're looking at. If we were to build a 1, 2, 3, 4 pattern here and we want to look at range, it's going to be a trending motion event. And so we'll duplicate, we'll use the pale yellow for the trending motion. Here is our shoulder, And then here is the head. And then here is the other shoulder, right? So this region here from a daily formation, on top of the fact that I'm holding this edge, 145 is not, it's all the way down here. So I don't think we have that to worry about, certainly from a daily formation. But here we are looking at this space. Let's remove the open interest. So we've got this motion. What's the problem? Well, the problem is I am still not able to get up over here. And this is my weekly open that I am rejecting. Okay? This is also the line that we were looking for. You see, when we saw the breakdown of this measured move, and it took us from 20 to 43, 44, so that's 24 points off of this edge. That took us to 14, and then it absolutely drifted down from the big edge up here at 50. So this, an entire measured move, this fade down here, takes this range out of play, and so now we don't really look at it anymore because it's complete. What we do have is a reversion to the mean, and that reversion to the mean normally gives us a bounce event. This is the new line in the sand that gives us the bounce event that allows us to head higher. So you can clearly see we're at a do or die zone. The break spaces, levels here, the break spaces, I know I've spent way too much time on this one. The break spaces are going to be above 38, or if we recapture and test around 28, 21 to 20, 22. Opening tick, we can see at 20, 22, 25, but we are just in a very argumentative space, still generally bullish. Let's take a look at the NQ and see if the pattern is significantly different. First thing we want to do is take a look at the monkey bars here. We've got the 30-minute motion on the monkey bars. You can see all this price acceptance down here, holding lower. And then this motion here, right? Of course, this was the early part of the day, and we came down, built the price acceptance, and now we're moving back up into the space. We've got thin volume through this entire, let's take this down to the initial balance. You know how much I like that 78 number, but let's take it down to the initial balance and use that region as our support zone. And we're going to look at resistance really just outside the edge of congestion. We know there's a problem at 74.28. They are selling off there. So if we can get up and over that zone, we definitely know this 74.43 area, 74.44. In an email exchange with Bob yesterday, we were talking about how to really see what trending motion ends up looking like from an intraday perspective. And here's our number, of course. We know this place, 93. That's going to be the line in the sand for us today as a support zone we're going to have to watch. But we were talking about how to detect the probability of trending space, and in my mind, it has everything to do with price and literally nothing to do with any other indicators. It is a tipping point that occurs. All right, so if we're taking a look at, I wonder if it allows me to do a paste here. Let's see. No, it doesn't. All right, so let's do a 3 count here. We're looking at the same thing. We're going to do 1. That's a shoulder. It's a trending count, and so we'll keep that one the pale yellow, right? Here's a shoulder. Here's the head. And now we are potentially building the other shoulder. Could be a little wider. Notice this shoulder actually has 3 candlesticks that make the shoulder. This head could really end up moving up very high and then pulling back again. So we're going to put the shoulder action somewhere around here, right? Potentially means, yeah, I can do that. I can buy right there at that space. Just so long as I don't fade it, I'm in good shape. I get an inverted head and shoulders pattern. It's going to shoot me out and up into the space. This is the rejection zone of times past. We are inside. Let's take a look at this. We've recovered where all the primary action was for yesterday in the 30-minute, and indeed we've breached it. So all of this to me says my pullbacks ought to be buy zones in this general space. And of course we know this area somewhere around that midline, plus we can see a building right here. That looks like a support zone as well. Nothing about our technical undercurrents are telling us anything different here, right? Nothing telling us that, but we are talking about very noisy formations because our SMIs are in the neutral zone, and we can see that our MACD is giving us moving averages that are very, very close together. All right, let's take a look now at the YM. I've taken a lot of our numbers off so we can see things quite a bit more clearly. Let's take a look at the monkey bars. Look at where we are, right? Above this region, I think above 412 gives us a breakout space, right? Now, we can't just buy it because it's breaking out, because we have a neutral event in general, right? We are extremely range bound in this space, and every time we've done that, we've accelerated past these zones and not able to move into the next volume point of control, right? We've just faded right back into the space. So can we see maybe this area holding as the next region of relative congestion? Yes, but we know about 25,089. We know this number really, really well. And so we'll have to push it just to the other side of the volume profile. So remember, regions close to the volume profile, once they start getting in here, the VPOC begins to be a magnet in that event, or up here, rejecting the zone, because that's natural right now. It's a breakout space, but because we have price rejection here, there's very little price acceptance in the low volume node, and we're approaching it from underneath. We know that's a sell space. That's why I've got this region as a significant watch zone, having it get underneath that 402 area in the space, and the failed retest there will give us more negative traction. At this juncture, though, we are punching upward, and so we have to be really thinking about the big picture. This is when the big picture is really the one taking the space. We've got, again, this really is doing exactly, here comes the trading day. Shoulder, head, shoulder, guess what we're going to see up here first? Failure, and then the pullback. That's going to give us the breakout of the inverted head and shoulders pattern. And we're going to draw this again. The big thing to see is that when we have these events, they can break significantly in the wrong direction that we think they ought to. Oh my gosh, it should hold the moving average. Yeah, well, it didn't. So we'll add that back there. It didn't. Instead, it faded right into the base of congestion and then bounced. But once it's holding over these edges, this creates that head. We have an inverted head and shoulders pattern here. What we do expect this was the buy zone. Now we're thinking to ourselves, oh man, I missed it. Well, not really. You didn't miss it because most people trade the head and shoulders pattern after the break of the neckline. Well, where is that neckline? I can argue that it's here, or I can argue that it's here, okay? If we argue that it's here, what we need to see is the bounce up and then the fade. This area right here was a breakdown zone. Remember, here's the breakdown arrow that says I'm on the hunt for support. That breakdown arrow works very, very nicely, and there's the support, the moving average. Now we're moving up into that space. I'm sure we've got a reversal candlestick here. Let me check. No, not yet. Very interesting. All right. So this still gives me my breakdown because the arrow's not there. We know that's there. But this is in a breakout space. Look at the moving, the slow SMI. Excuse me. You don't want to buy the highs here with that slow SMI so far below on the big spaces, but on the small spaces, you know it's coming into potential resistance. This is the monthly open on the chart. Bullish action all the way around. Don't try to short here. It's breaking out into the resistance zones. Could this be a shark pattern? Yes, it could be. If we measure the shark, well, I think that violates the shark right there. But let's take a look at this wave. If we measure it using Fibonacci, we've got, oh, nice. We've got confluence action right up here. This is where we're going to see sellers. And so for those of us that are buying right now, do you want to take some profit? Yes, indeed you do. That is heavy congestion. No reason to get out of the long. The motion is upside. For those of you working on paper trading events, you can simply write down on a sheet of paper, okay, I've got resistance here. If I decide I'm going to short it at 25,447, where do I need to take profit? And it is right there at 25,413 because this is a bullish motion event. It is clearly, let's take a look at it from the big picture space. Here's my failure to head lower. Here's my test of frontline support that was resistance, and I've broken up over my secondary resistance zone. So everything here tells me I've got bullish action on the pullback, right? If we're looking at an inverted head and shoulders pattern, we see our 1, 2, 3 area, something that also tells us we have bullish pressure. And these guys sitting in the neutral zone tell us there's no reason in the world to buy over this edge. It just is not the right thing to do. Let's take a look at oil. Wow, really thought oil would hold this lower high space. Excuse me, a higher low space right around our 65 78 area, no such luck. Absolutely sold off super dramatically. Let's take a look at the monkey bars. What are we doing? Two areas of price acceptance sitting right here. So what do we know? If it gets out here, it's probably not going to wait for us. So as soon as we can get up and over this zone, let's create an alert here, we're going to have something that's going to punch to the upside in my mind. Underneath, they're still building, potential exhaustion event here. And if not, folks, take a look at this. I went to the composite charts here. Look at where we are. This region right here, last time we saw it was June on the bounce space. What do we have since June though? We have a low, we have a high. Potentially this is one wave that gives us a higher low, easily could bounce right back into congestion. Where are my heavy congestion areas? They are between 66.30 and 69.30. So this chart, if we take a look at a measured move, 66 to 69, that's $3. This measured move says we're going here. 50% range is $1.50. $1.50 from here is what? What is that? 164, 64.70? We broke that edge. So now we bounce and expect to fade underneath area. This is the 145 exponential. This is Vlad's number. And so that, if it fails that area, it's going to complete this measured move. It is very likely to complete this measured move. This is also the monthly 12 simple moving average of the composite. This looks very, very messy and potentially very negative. That being said, we cannot take any shorting action until it loses 64.90 or so, really 64.80. But we know that when we come to 65.40, we've got tons of sellers up there. Tons of them. And so we've been selling off for hours and hours and hours and hours in that space. All right, finally, let's take a look at gold. Another one. This one, I do also believe it's volume exhaustion and capitulation. Take a look at the last low on the composite that this is giving us, right? So we have a low, a high, higher low, lower high, and now a test almost right on the money of this edge right here. Very steep motion to the downside. When it happens like this, my thought is always a snapback bounce. But it cannot get over 1190. It's been trying forever to do that. So if we take a look at what's happened, this is in pure fluid breakdown motion. And it's gone parabolic on us. See, we've got a wave. And so this curve right here, it's not linear, it's curvilinear. And that has got to bounce. It's got to bounce. So where it's going to bounce, really, look at how far away it is from our pivot readings. Pivot level 3, that's, I don't know, what is that, a 6th pivot away? That has got to be a bounce zone. First pass, there are going to be a lot of trapped buyers. Trapped buying action looks like it's around 88. My thought it'd be around 90 because we can see them trying to pick the bottom here But these two spaces suggest, take a look, now we're going to do our 1, 2, 3, 4 count for the bounce action. Here is our reversal formation, right? So this one's going to be orange. So here we have a failure to head lower. Here's our test of frontline resistance. Good night. Here is the line of our secondary congestion area. And so we know what this means intrinsically, right? We have not gotten to secondary congestion yet. So everything here essentially tells me I could break down, right? With the 4 action coming around here, maybe here. So if this 3 really expands because it's going to hit stops, it could go up to here, and then that would be a very clean reversal zone. Right here is going to be very solid reversal, but that would be a trending move, right? Because we are counter trend motion into resistance, and if we're trying to buy that counter trend motion, we're going to look for it to try to hold our frontline support in this area. So let's see how our 1, 2, 3, 4 works today with this motion. All right, we're good. I spent way too long on that, but let's get back to our regular trading spaces for the live trading events.